Jim, if the entire U.S. commercial truck fleet was to electrify, it would cost nearly $1 trillion. Jim, that's with a T, not a B. We're at Scrooge McDuck level here in the trillion, 1 trillion in infrastructure investment. Where are these funds going to come from? And I ask that with the backdrop of we're in a higher for longer interest rate environment here.
Yeah. So the $1 trillion is the figure that it'll take to build out the transmission and the distribution for the electrical grid to electrify the medium and heavy duty trucks. And it's broken down essentially in two different buckets under the Roland study. About 620 billion with it be 620 billion will have to be covered by the fleets and really the truck stop operators. So the facilities where you're going to recharge these vehicles. And $370 billion is the price tag for the utilities to upgrade the transmission of the electricity. This does not even include, Grayson, the generation of the additional electricity which can be needed to electrify medium heavy duty trucks. So that's a huge price tag. Where's it going to come from? That $620 billion price tag for the fleets and the truck stop operators, that's a huge number. And nobody knows where it's all going to come from. Because if you look at, if you're the price of your truck, $200,000 for a diesel truck, and then you're going to pay about $450,000 for a battery electric. So you're taking a huge hit right off the bat if you're a fleet operator. And another data point in that Roland study, if you're a 30 truck fleet and you want to electrify those 30 trucks, your utility upgrades are going to cost anywhere from about 4 million to 18 million. That's a huge delta, I know, but the reason for that is Roland surveyed different geographic areas across the country, and there's a wide variance of the costs. So I don't know where that's going to come from. The fleets can't sustain that. Obviously, a conclusion that you have to reach when you're looking at this study is the costs are going to have to be absorbed across the board, right? Ratepayers on utilities that's going to be an increase. Consumer goods are going to be an increase. And so we don't know where that $1 trillion is going to come from. And in today's inflationary pressures, this is only going to exacerbate that.
How can the consumer afford it? Grocery prices are high. That's one of the stickiest parts of inflation. If the government decided to turn on the printing press again, Chairman Powell of Fed aren't going to hit their 2% inflation target, and it's going to cause a recession. So where does it come from? The money is not out there. I'll give you some numbers from JB Hunt because they reported their sixth straight quarter of declining earnings and fifth consecutive period of dropping sales. First quarter earnings fell 35% on a 9% sales decline. Operating income fell 30% to 194.4 million due to lower volumes as well as increases in equipment costs. There we go. Equipment, insurance, claims, and bad expense. Obviously, JB Hunt, one of the largest fleets in the country, a very large intermodal business. They can't afford it. Government can't afford it. Consumer can't afford it. Are we going to turn on a magical machine? Are we going to get a money tree from a children's camp? Where's it going to come?
Some of the advocates for these hyper aggressive timelines to get to zero emission trucks, yeah, they do think that you just wave a magic wand and money will appear and you'll pay for all these things and we'll all be happy thereafter. And that just isn't reality. And I'm not sure that the administration is in tune with exactly the cost of groceries, as you said, and these other consumer goods. They don't seem to be, well, they obviously realize it, but it doesn't seem to be a priority. And so I don't know where they're supposed to come up with all that money. You talked about the JB Hunt numbers. I read the other day that the Nike Swifts, their quarterly earnings were not what they had hoped and not what the street predicted. And they turned down some freight, they said, because they couldn't take any more downward pressure on their contractual rates. Until the freight market gets back into the equilibrium between supply and demand, these trucking companies are continuing to feel the pinch. I've been to a number of trucking conferences in the last 2 months, and people I know that have been in the business for 30, 40 years, Grayson, and have had very profitable companies say this is as tough as they've experienced. And that's saying a lot. We need some relief in the near future, but as long as we keep just pumping money out from the government, that inflation is not going away at all.
Do you feel it's a tougher freight market today than during 2008, during the great financial crisis?
Well, again, the folks that I talk to say that it is more difficult. It is more difficult. I think a part is the capacity grew exponentially coming out of COVID. Everybody thought this was a great way to make some money, and it was. A lot of folks increased the size of their fleet, a lot of new entrants into the marketplace. And so you had really was in large part causing this is that disequilibrium in supply and demand. I was talking to one of the country's largest, or an executive from one of the country's largest freight brokerage companies the other day. And one of their thesis is why you haven't seen the exodus from the marketplace under these market conditions that you would expect in the capacity side is because those years in 2021 and 2022 were so good. They're so profitable for a lot of these smaller fleets. They believe that those smaller fleets paid down the debt on their equipment, and therefore they're able to hang on longer in these types of rate environments. And until that type of capacity exits the marketplace, the rates are continuing to be depressed. And a lot of folks were predicting second quarter, third quarter improvement in 2024 on rates. Now everybody seems to be pushing that to the right. And it's anybody's guess when it's going to get better, but nobody I talked to is expecting much improvement on rates before fourth quarter of this year.
You have depressed rates. You have a Fed that's going to hold the interest rates higher. We might not even get a cut, let alone cut this year. And then you have clean air mandates that are taking hold in California and they're starting to circle the country. When does economic reality or point blank, when does common sense set in?
I think it's going to start to set in when you start to see the price of goods even continue to go higher than they are today. It's going to set in when you're going to have constraints on the network because these types of vehicles don't have sufficient range to deliver the goods. So the just-in-time freight is going to take a hit because of the range and payload issues. And until folks really start to feel that pinch, there are so many folks in this space, as you know, Grayson, that have kind of bought into this. Like, this is one of the best descriptive terms I've heard about, or I've heard. This is calling this dogma, right? And when you're into dogma, facts, even data staring you right in the face doesn't sway you. But until you start to actually feel the pinch, that's where I think reality will start to sink in for these folks. There's a couple things that could happen though, right? That could reverse where we're headed. If there's a change in the administration, I would predict with high likelihood that you would see change both at the federal level, which would then affect or could affect stuff such as CARB and the follow-along states. Because if the EPA withdraws the Clean Air Act waiver that California has to have more stringent requirements than the EPA, if you would reverse that, then we get some sanity and some sensibility back into this. But, and this isn't political, right? I mean, Grayson, we all had these discussions. There's no doubt that if the current administration gets a second term, we're seeing more of the same. But if there's a change in administration, then I think you'll see some relief on these things.
If we don't see a change in administration, how much inflationary environment will CARB cost?
I don't know the answer to that. I mean, it's not a small percentage, not a small sum. What are there? 18 states, I think, now that have followed along with CARB, say they're going to follow along with CARB. You know, there's been some states that have looked like they were going to adopt the CARB standards and chose not to. That's some good news. You're starting to see even on the Hill a little bit more of a bipartisan reality, if you will, that these timelines are not going to work. We truly believe, and I've had a number of discussions with a number of members of Congress and staff at the relevant committee level about these numbers. And they are eye-opening, they're concerning. Where's the money going to come from? How are we going to sustain that? And so I think that this study and similar type of data will make an impact, Grayson. The problem is this going to be more of a political issue? Or is this going to be more of a common sense economic reality issue? And in today's environment, I think we all know the answer that the extremists on both sides tend to carry the day. And our job is to make folks more centric on this. And that's what we're doing.
To me, the game is won in singles. Why not start with a single, eliminating the 12% federal excise tax on heavy duty Class A trucks, allow fleets to upgrade to newer, cleaner trucks, take a single instead of trying to hit the home run every time. Why are there not approaches like that? You also have biodiesel, you have renewable diesel, you have all sorts of tricks of the trade that are readily available today that don't have inflationary pressures and do not require $1 trillion of investment to make this happen.
That's the $1 trillion question. And we don't have an answer for it. There are other alternatives today, as you said, that would reduce emissions from truck carbon footprint from the industry significantly. So if you look at trucks that have pre-2010 engines, right? And 2010 is an important year because that's when the model year for the previous most stringent EPA standards went into effect. Still, to this day, the numbers are, rock solid, but somewhere around 48% of today's heavy duty trucks have pre-2010 engines. And if you do the math, even under the DOE's math and standards, if you were to replace all of those 48% of the pre-2010 engines, you'd reduce the emissions by about 82%. And so there's low hanging fruit. If the focus truly was to get the biggest bang for the buck to reduce the carbon and GHG, there are other ways to do this, better ways to do this. And to incentivize folks to refresh their fleet, you take that 12.5% federal excise tax away. So a $200,000 truck, right off the top, you're paying close to $25,000. just to the federal excise tax. If you're talking about if you have the desire and have the ability to charge a truck and it can fit in your freight network, that $450,000 truck, you're already paying about, what is that? Close to $50,000 in taxes to the federal excise tax. So repeal that. And by the way, the federal excise tax, the reason why it was put on the books to begin with was to help fund World War I. And so the tax is completely outdated. The problem is when the federal government gets a stream of income via tax, turning off that spigot really hard. And what they call in the industry is a replacement tax. Well, what's the replacement tax? So there are other ways to do it. You mentioned, one quick tidbit of information. This is from ATRI's study. If you look at the carbon footprint, life cycle carbon footprint of a diesel truck, put that at 100%. If you look at today's battery technology, that's like 66%. So in other words, a third improvement. If you look out into what they think the technology look like in about 2045, 2050, it's about half of what a diesel truck is, life cycle. But if you look at renewable natural gas, in today's technology, renewable natural gas is 66% better than diesel. So your carbon footprint is much better renewable natural gas. You don't have these huge infrastructure costs at those filling stations. It's cleaner. And by the way, it's clear. And biodiesel, we should be looking at biodiesel. There are other things to be looking at, but we have this crazy fixation on battery electric. And I'm often asked, and I'm sure we all talk about why did we get to this point in time? And I don't know. It's because I don't know if the OEMs thought they were going to get there quicker than they are. And so they quote overpromised or thought they'd have these technologies available today in different applications, or whether the green folks just picked, which I think is partially or mostly true, is they just picked these timelines out of the thin air, Grayson. They literally picked a lot of thin air carb. They, as I understand it, I wasn't present, but I've heard this from numerous folks that were there. They literally just accelerated by 5 years just because they felt that they ought to do that. Right? There's no science behind it, no technology development behind it. Just, I think we should accelerate this by 5 years. Well, that's craziness. I mean, that's, I've been asked, if you were to do this, how would you do it differently? I said, well, I look at this model and this is the last thing I would have done. I tell you, this is the very last thing, very, very worst way in which we could have gone about this, I think.
The timelines are purely political. There's a lot of politics wrapped up in carbs or wrapped up in energy, point blank. And what nobody talks about, the United States is exporting oil again, point blank. It's growing. It's exporting. It's creating jobs, largest employer in the state of Texas in the oil and gas, not to mention the economic impact that it has. So what is the best path forward? How do we get that single where we can lower emissions, increase jobs, have positive benefit on the economy, and not pull something out of a rabbit out of a hat and say, biddity boppity boop, here we are. We all know magic doesn't work. Unfortunately, we learned that with Harry Houdini when he tried to escape from the torture.
Yep.
It didn't work. There's no such thing as magic. So what's the path forward?
Hope's not a strategy, right, Grayson? So a couple of things. You need to look at where you can get the most immediate bang for the buck. And as we just talked about, eliminating the federal excise tax to incentivize folks to refresh their fleet with cleaner, by the way, safer technology trucks. So that's step one. Step two is continue to advance the technology and the application usage of renewable natural gas, which means more parity in subsidies between RNG and battery electric. Continue to develop biodiesel, continue to develop hydrogen, which, by the way, hydrogen seems to have a great application in the long haul space, but there are issues with price point right now and the cleanness of the hydrogen. But you have to have an all-encompassing agnostic approach to it. And unfortunately, the vast majority of the incentives and the effort today is on battery electric. And we haven't even scratched the surface yet, right, Grayson, on the minerals to build these batteries to put on these trucks. That's a whole nother topic. Pick the low-hanging fruit. Reduce or eliminate FE parity of subsidies for RNG and biodiesel, and focus on the applications where the battery electric does make some sense. And I always am cautious about saying that because where does it make sense? Short haul, right? But even if I told this story a number of times. I spoke to a couple folks that own fleets at ports, and their average length of haul is literally 9-10 miles. So as short as you can be, but they need to make multiple turns with that same power unit every day in order to run their fleet properly. They said because of the charging constraints and it'll get better, but today's charging constraints, they have to have twice as much equipment to run the same amount of turns because of the downtime of the battery electric truck. So when I say put it in the applications where it makes the most sense, I'm not trying to pass the buck to those port operators because they have problems with it as well, but don't put the entire industry in one bucket, which folks mistake all the time. They do this all the time on whether it's labor, whether it's environment, whatever it is. They think that the industry is a cookie cutter industry, and it's not. So apply the battery electric in the application that make the most sense, where there's the greatest ROI, and just quit focusing on these 5 year model year plans that really are unattainable.
I would say take the small steps first. Take the small steps. See the return that you're going to get on the ROI before you jump and put a timeline that's going to be unachievable. That's going to turn into political football down the line. The future is bright. The future is autonomous. The future is common sense grounded in economics.